Hello, good afternoon, everybody. I hope you're having a good afternoon. So, today's webinar is going to be one very good one. You want to learn something that is very, very special. And the first thing which I'm going to do is I'm going to explain exactly what you're going to look at. You want to see how can you make money trading energy. That is, how can you make money trading gas and how can you make money trading crude oil. So, to start that, we'll load the chart for gas here on our screen. The very first thing which one must know first of all is something known as pips. If you want to make money trading energy, you must be able to understand what pips is, what pip value is, and what swap is. So those are the things we want to explain first of all. We want to look at what is swap and what is pip value. What is a pip first of all, and what is pip value. Second. So this is gas. This is gas. If I remember some few days ago, actually, we did mention something about pips. We said that any slight change in price is known as the pips. So if price currently, assuming the price is at this level here, 2.951, then the price moves up to somewhere around 2.968. The difference between this and this, which is, this is 17 pips. So the difference in change in price is what's known as the pips. Each pip has a value for every currency or symbol you choose to trade. So the pip value is not the same for all the symbols. If you are looking at these symbols here, the pip value for all of them is not always the same. So you will get that there's a trade here, there's a trade here, there may be a trade there, but not all of them. They may move the same number of pips, but not all of them will give you the same amount of money. Some of them have more money than others. So to trade successfully, you need to know which one has money and which one does not have money, so that you don't find yourself trading something which will move a lot of pips your way, but there's no money in it. So there's an indicator which I developed some few days ago. Pip value. A second. Pip value, we have it here. Let's look at this. So assuming you're trading a volume of 1, lot size of 1, the pip value per 1 point is 10 USD, which means the value for 1 pip for gas is 100 USD. And then if you look at the same thing, let's check another pair. Maybe now at gold. Gold is even less. Gold is 1 pip, I mean $1. Gold euro 50. And then we look at another one, which is ASX 0.68. Then let's look at the normal pairs that we normally trade. Euro USD is 10, which means Euro USD is actually greater than even gold euro. Then we look at this, GBP USD is also 10. USD JPY is 9 point something. Then we have USD CHF, this is 10.02. USD CAD is 7. So you need to know the values of this one correctly, so that you don't find yourself trading while there's no money. If there's a trade here, there's a trade here, there's a trade here, there's a trade here, and all of them are showing you the correct signal, the one which you use to trade, stick with the one which has the most value and will make the most money. So that's what brings us to this one, the symbols which I was mentioning, gas. Can you see that the same lot size of 1 which we were looking at on other symbols and we are getting 10 is actually 10 times. Gas gives us 10 times the amount we get from other symbols, which means the best you should be trading, understand what's happening on gas very well. Then try trading that. Let us look at Brent oil also. This one, this is 10. So this is slightly lower than it's like almost like the other pairs, but this does not mean that you disregard it. This is one thing which you need to look at. Look at the pip value of whatever you want to trade first of all. Before you start trading, you must get the pip value for whatever you want to trade. Like in this case, if I was to trade anything, if I see a good signal on gas and also a good signal on Brent oil, I will settle for gas because of the pip value. And also this comes with the greatest risk, which means if you lose a little, you're likely to lose a lot of money. Like if price goes against you by few pips, you're likely to lose big money. And if price goes away by few pips, you're likely also to get big money. So it's like a double-edged sword where you can make money if it goes away, or you can lose money if it goes against you. So this is one thing. This is one thing you must know. Another thing which I've mentioned here is swap, known as swap. So swap is basically the amount of money you charge for holding trades overnight. If you have a trade today and the trade runs and stays overnight, there's amount of money which you're going to be charged for it. So here, as a second, this is a demo account. Assuming I pick a sell on gas. So far, this is a spreads account. The volume is this 0.2. This is the symbol which you just sold. You sold it at this price. So far, I have not fixed stop loss or take profit. And then the price currently is around. Sorry, this is just a second. Yes, this should be the entry price, and then this is what the price is now. So swap is this one. You may not see it now because the trade has not run overnight, but if you hold a trade overnight, you're likely going to find the value which is now 00 shall have changed to something negative something. So normally with FreshForex we enjoy the fact that there is no swap commission. You're not being charged for holding trades overnight. If you're trading something like gas or Brent oil, there's not anything like swap. So this one you'll always find it negative, positive. It's 0.00. For now it's 0.00, which means if you hold a trade overnight, there is no such thing as swap for you. So these are the two things. If you want to make money properly, look for a case where the swap is very small. That is, if your broker, if you are charged swap for holding trades overnight, commission, if you are charged commissions for holding trades overnight, this must be very, very small. Because assuming you have negative 14 and then the trade runs overnight, then the swap becomes negative 70. That increases the loss automatically. So we don't want to find ourselves in a case where this one becomes even more disadvantage to us. So one thing we found that is that the value of pips makes a lot of sense. This is the first thing. And then we also found that the swap must be very, very low, or your broker must not be charging swap at all. So another thing, other than the ones which are these are the ones which you need to know. Even if you don't have a strategy, these are the ones that you have to know proper. You have to at least try and understand possibly what a pip value is, what pips are, what swap is, and what this commission is. Because if I was using a commissions account, this could have been some negative. So let us check one thing. Let us check one thing. How can you trade this gas successfully? How are you able to trade this gas successfully? So there's one thing which I keep mentioning every day. I keep saying it and I have to repeat it again and again because that's the only thing that makes sense in the Forex market. If you want to trade successfully, just ensure you have a very good risk management strategy. That's the first and the most important thing. Risk management strategy is everything. If you don't have that one, even with the best strategy, you may still find yourself losing. So if today you have a very good strategy, a strategy which always it goes like 90% of the time, if you don't have any proper risk management strategy, you are likely going to lose money eventually. And the best way to start having a good strategy, risk management strategy, is to understand what this means. The information which I'm having here, understand it properly. So the value per pip depends on the lot size. If I decrease the lot size, this one decreases. Let's see. assuming I decrease the lot size to maybe 0.01. It changes to $1. So if you're trading 0.01, just a 1 pip move your way will give you $1. 1 pip against you will make you to lose $1. So you need to understand exactly how the lot size relates to pip value. This is the very first step towards getting a proper risk management strategy. The problem is normally not the strategy somebody is using to trade or you're using to enter trades. Where the problem is how to relate lot size and the pip value. How much are you willing to lose in a trade? That's the first thing. That's the most important thing you have to ensure that you take into account. So I'm going to look at this chart here. Let's look at how I'm going to look at this chart. I will look at it from the weekly, first of all, from the monthly. This is how you're supposed to look at your charts. If I want to trade this this symbol successfully, you don't just go to a 1 minute chart, 15 minutes or even lesser time frame and start trading just because there's a resistance, there's a support. Correlate the same thing that's happening here to what's happening on a higher time frame. So you'll go to 1 hour, daily, monthly, then find out what is possibly happening. Like this, then like this. And then we'll draw this, we'll mark this as a zone, this level here, this one, such that we are having a very good support here, a support, and then there's a break below. There's the first retracement, price pulled back up and is currently around the same place where we're supposed to look for a sell from. So if I've known already that this is now a sell, this should be a very good sell. This is a very good place to look for a sell from. On the monthly chart, you know that this is a sell. Also get the possible place to take profits on, so that you sell, you know exactly I'm supposed to take profit at this place, I'm supposed to stop loss at this place. So on the monthly, I'll also have this here, and I also have this one here, this level here. So I expect a trade from around somewhere in between 2.796 and also 2.675. Then if that trade goes my way, this is the place I want to take profit from, 2.231 and 1.744. So in case the price does not go down, where should I stop loss at? The first place is here. This is the correct place. This high is above this pin bar. And in case the price comes and closes above this level but does not hit this line, I'll assume that we've broken that level and then we expect price now to proceed upward. So on the upper side, I'll expect price to go ultimately up to this level here. So what I'm trying to do now is just explain how you're supposed to look at your screen. This is how you're supposed to, when you're trading energy, these are the things you're supposed to look at. Look at your levels from the highest possible time frame. Get clear levels from those time frames, and then only trade when price approaches those levels. So this is what I'll have. I'll draw my levels like this. This one here. I'll have my levels like this. So technically, we are waiting for a sell here. We've known very well from the monthly chart that there's a sell, and we expect the sell to take us up to 2.231. If price goes below, then it should go up to 1.744. On the upper side, these are the levels to look for. Actually, this should be the level. This should be the zone. So this is the very first step. If you want to trade energy successfully, have your levels on a higher time frame, as high as possible. Then we move forward to the same chart on a lesser time frame, maybe weekly. Then we draw the same levels. We try and find the same levels which we were seeing on the monthly. We'll draw that, and then we'll also draw this like this. Then we'll also draw this at the top. So basically, this is how you should be analyzing your charts when you want to trade something like energy, any CFD. Draw your levels from the highest time frames possible. Start with the monthly, move to the weekly, and remain on the daily. I'll draw this here, and then like this. I'll also pick this level here, this support, like this. Then I'll also put a line at the very bottom, which is at this point here. So if you check what we're having on the monthly, we actually are supposed to be seeing a sell. On the monthly chart, we've seen an attempt to break above, and the price currently pulling back to the lower side. But if you check weekly, the price actually gapped above the same level, retraced back, and is still above the same place you're supposed to be selling from. So this one, if you look at it from the weekly alone, you are able to see that this is a buy. But if you look at the monthly, this should be a sell. So what this means is that you have to wait for the monthly candle, which is this one, to close in between the zone, this one, or it should close below the lower line, making the zone 2.675. This is what must happen. The price must either close above, within this zone here, or it should close below, so that we understand exactly what's happening on the weekly. This was simply, so if you are looking at maybe the weekly alone, you're not able to get exactly what's happening on the monthly. This is why we insist on understanding what's happening on the highest time frame possible. If you are looking for a sell here, the same sell must be here. The same way, now we've known what's happening on the monthly, we've known what is happening on the weekly. The only thing remaining is to understand what's happening on the daily. So we switch to that. Daily. This is daily. So if you check daily properly, we want to find the same level, this one, yeah, and then you also have this one, the entire zone. So basically you can see that we had a very, very good support here. It was used severally, the first support. Actually, there are others before that. We had this, also had this here. And then we had this here as support. Then we also had this as a support. Then we had this as a support, this one. And then those are break, price consolidated. As we're speaking now, the price is basically above the same place where we wanted to sell from after breaking below. So if you are checking the daily chart, we are also seeing a buy. There's possibility that the price may be heading to the upside, and if it's to go up, then this is the places we're waiting for it at this level here. Then you also have this level here. So this is basically how I look at my charts. I don't just enter trades because one time frame is showing me a trade. If I have a buy on 1 hour, I have to confirm the same trade with a higher time frame. So you cannot be trading one time frame and then expect to make money. You cannot be trading one time frame. You cannot be trading daily alone and then expect to make money. We have this. Then we have also a line here. Then we also have this one. So the price basically is above this level. This is a very good place where when price was below it, you are actually looking for a sell. When we had this support here and the price went below it, we were waiting for this retracement so that we sell it, but then the price moved up, gapped higher, and is still above this level here. So on the daily, we are still seeing the possibility that the price may head to the upper side. On the weekly, the same thing, the price may still head to the upper side. On the monthly, we are looking for a sell. What does this mean? How do you now come up though to do? Do you start buying because daily is a buy or weekly is a buy, or do you wait for monthly to give you a sell so that you can pick that sell? So the answer to this is very simple. When you see this is showing you a buy, like a lesser time frame is showing you a buy, but a higher time frame is showing you a sell, just know that the sell you're seeing on that higher time frame may delay. That is, the price may move up for some times. That is, people who are buying on the daily may push price upwards before we eventually see the higher time frame close perfectly as we expect it. So this does not mean these time frames are contradicting each other. They're not contradicting each other. We still have the same information. If this is a sell, it remains a sell. This is a very good level, a very good support. Just look at how perfect this was. Since 2016 we had a support, 2017 we had a support. So this level is perfect. We cannot say that the daily time frame can actually change everything. No, the daily time frame may be fetching a good price. That is, it may be getting the correct price so that we can look for a good sell. We have this here. So if you have time frame that are showing you different things, this is showing you a buy, this is a buy, this is a sell. Just know that the sell you are seeing on the higher time frame, which is this one, may delay. So the best way to confirm that this is going to be a sell is to wait for the current month's candle to close, which means we'll wait for the current month to close. That is, for the next how many days? This is around 17 days. We'll have to wait for a good 17 days to be able to confirm that this is either a sell or it's going to be a buy. If it closes above this level 2.76, we'll pick a buy. If it closes below 2.675, we'll pick a sell. So the reason I'm having this line says to guide me so that I know very well if this is a sell, we'll be moving from this point up to this point here. Wherever I choose to sell it, if I sell it now or if I sell it from the daily, if daily gives me a sell and I sell it, I know very well my profit is going to be up to 2.231, this level here. This is a total of how many pips? Calculate the pips. This is around 455. So basically, this is what we expect to happen. If you pick a trade like this, you're supposed to hold on until the take profit is here. So this brings me to the next thing. If you want to make money trading CFDs, you should be. I'm not saying you must, because some people trade maybe 1 minute, but if you want to make good money, this is from real life experience. Be that person who holds be a position trader. Be that person who holds their trades for some days, or maybe some months, or maybe some years. That way, if you enter a trade here, be that person who can hold on to that trade up to this take profit here. This is one of the best ways to make money here. You should be able to hold on to your trades properly. If you have a sell, like I'm seeing a sell here coming up next month, I'm supposed to hold on to that sell up to when it hits either this level or the next one, this one, 1.744. So we want to move to the next thing. We want to look at oil. This is a simple analysis of gas. We want to look at oil now. Let's look at oil. We want to look at Brent oil instead. It's still oil. So as I've looked at gas, I want to look at Brent oil just the same way. This one. The first thing, you go to a higher time frame, then find all the possible things somebody can look at in the chart. Draw all the shapes you can draw from that higher time frame. Find the trend from that higher time frame, and stick to what that higher time frame is saying. So the first thing I'll do, I can see a line running all the way from the top, this like this, and then you also have this here. So if you are looking at the monthly chart, you can see that we are actually having some very big shape, which means if price is not here, if we don't pick a buy from this point here, you're supposed to wait and pick a buy. I mean, if you don't pick a sell from the top, that is, if price comes up to this point but we're not able to sell it there, we're supposed to wait for price to get back down up to this point so that we can pick that buy from that point. This is what we are seeing on the monthly. We are seeing the possibility that the price may continue upwards up to this level here, or it should move down up to the support. This according to the monthly. So this may not necessarily give you the clear signal. I mean, it may not necessarily give you the correct level because I cannot find a good level here. Just a second, let me try this. There's no level there. If I try this, this looks like we have a level there. So if this is a level, which means the price may come back to it before it continue downwards, or it may continue up to this level, this trend line, where we look for a sell. So this should be the correct place to sell from. If you have to sell anything, I advise you wait for price to get back to this level. Wait for price to come back up to this resistance here. We check the same chart on the weekly. Like this. Weekly. On the weekly, let's find our levels. There's a trend line there, that should develop in the near future. And then you also have this. Okay. And then I can also see something that looks like a trend line here. So basically, we are just trying to come up to a place of precision. We want to come up to a place where we know very well that this is the correct place to look for a trade from. So if you draw your lines now like this, you should be able to see that these are the places to look for. If you are trading Brent oil, then this should be the places where you expect price to actually give you some signal. These levels here. Either the price should move down, bounce off from this trend line and head straight to this upper trend line, or it should break above that trend line and continue up to either this level here, this one, or it should continue up to this one. So if you are trading this symbol on the weekly, we expect something like this, and then a retracement before we can continue to the upper side, up to the upper trend line, this one here. This is what we expect to happen ultimately. So this is what happens. This is what will happen on Brent oil. This is what we expect to be happening. If this does not happen, we have to give a fail mechanism, which means that if the price now goes against us, this is what we expect to happen, and then a retracement. I mean a move to the lower side. The move to the lower side is the fail mechanism, which means if price does not go upwards, that is, if it instead of going up, it moves to the lower side and even breaks below this level, we'll still wait for a sell from the same place. We expect that sell to take us up to this point or up to this level here. So basically, this is what we expect to happen. You have to have something like this. If you want to make money trading like energy, you must be able to understand your charts from the highest time frame possible, and then be that person who understands you must be able to understand exactly how much you're willing to risk in a trade. So this is what I'll be waiting for. I'll be able to pick a sell here. If price goes below this level, it traces back, I'll be able to pick a sell. If it goes above, then it traces down, I'll be able to pick a buy up to this level here, this upper trend line. So this is what we expect to happen. You must be able to have something like this. Before you enter a trade on any CFD, draw your levels the same I've done on these ones. Check them from almost all the three main time frames, monthly, weekly, daily. And then if all of them conform, that is, if all of them gives you the same signal, pick a trade. So we're not going to trade just because one time frame is showing us one thing, no. Because what we've seen from what we looked at in gas, you may be able to see a sell here, but then this is a buy. So you don't ignore this buy, because this buy could actually push price up to the upper side. So when this is true, when this is showing you an opposite signal, and this is showing you some signal also, wait for those people who are doing it on a lesser time frame to continue, to clear up. Then you should be able to enter trade with those people who are doing the monthly. So we look at Brent oil at a lesser time frame, 1 hour. Daily. This is what the daily looks like. So the first thing I'm seeing on the daily is this. We are upwards. This is the first thing. We are upwards. And then I can also see this line there. That line. So what this simply means is we are somehow still heading upwards. This supports the position you're seeing on the weekly, that the price should be continuing upwards. So if you are looking at this, if you see that this is a buy, and this also is showing you the chances that the price may be heading to the upper side, please remain in that buy position. Do not do anything other than that buy. We've seen that the monthly is a buy. We've also seen that Brent oil weekly is a buy, and now we are seeing that daily is also showing us the formation of a buy, which means if you see a buy signal, if price pulls back up to this level here, you're supposed to pick that buy. Whoever waits and buys it here is actually also buying it on the weekly and on the monthly. So that should bring us to the end of today's webinar. So far we've just looked at just all the things which you're supposed to look at. The first thing which I mentioned, which is very, very crucial. If you want to make money trading, this symbol CFDs, first of all, understand the pip value. Understand what a pip is. Understand how to derive the pip value. Then the next thing, understand how to work with the swap. So the other thing which I've just illustrated here is that you have to understand what the time frame is like. Understand what is happening on the highest possible time frame, that's on the monthly. Scale that down to a lesser time frame, and scale it even lower to the third time frame, which is the daily. Then if all of them conform, that is, if you see the same signal on the monthly, weekly, and daily, pick a trade and hold on to that trade until completion. So our levels are here. Our take profit levels are not based on the daily, they're based on the monthly, which means if price goes up to a monthly level, we'll take profits. So if you pick a sell here, and then you see the possibility that after picking that sell, the price may continue upwards, but you're already in a trade based on the monthly, remain with that monthly perspective. Do not exit anything just because the price is showing you something else. A lesser time frame is showing you something else. So that should be the end of today's market overview. We've only looked at two CFDs. We've looked at Brent oil and gas, but then this is just the same procedure I use for the others. I have to understand what is happening exactly on a higher time frame, then I have to scale down to a lesser time frame, then wait for both of them to conform. Then if I have Brent oil and this one, if I have these two, if there's a very good formation on Brent oil and there's a very good formation on gas, I remain with the gas. I trade gas because it has a very large pip value. So thank you very much. We'll meet again Wednesday next week.